Ladies and gentlemen, please welcome Morgan Brennan of CNBC and John Koudounis of Calamos Investments.
Well, John, it's great to speak with you today.
Great to be here. Thank you.
Let's start with, we're here to talk about crypto investing and sort of where you see us in this landscape right now. And I am just curious what inning you think we are in, especially as we do have an administration and a Congress that's moving forward on legislation for this asset class.
Well, first I want to say that we are traditional asset managers, and a lot of the traditional asset managers weren't and aren't involved in crypto and Bitcoin and everything else. But we thought that a lot of we're very progressive, innovative, and we needed to get involved. I think we're still very early innings in crypto. I think it's just beginning to take a big hold on what's going to happen in the future. And this current administration has been very friendly towards it, wants to make sure that the United States is the leader in it because of the technology and everything that goes with it. And I think, and I applaud them for doing that, so we can be leaders and not followers, because the bus has left the terminal. It's not coming back. Bitcoin especially has gotten so big that people need to get involved.
$46 billion in assets under management, to your point, traditional asset manager. Why, when others have held back, at least up until now, did you decide this was the time to get in?
Well, we are traditional, very good risk managers and great options traders. Our DNA is, our founder, John Calamos, has been phenomenal in convertibles. And the convertible market, a lot of it is, the gist of it is, you limit your downside, you temper your upside a little bit, but you have a limited downside. And so a lot of things that we do, it's part of our DNA to risk manage. And we felt that someone needs to come with a product that can risk manage crypto. And there's no doubt that crypto, especially Bitcoin, I should say, has been the best performing asset in the last 10 or so years. However, it's extremely, extremely volatile. And that scares a lot of people. And I don't, you don't want to be in a position where you can lose 30, 40, 50, 60% of your principal for a lot of people that can't afford to do that. So what we wanted to do is to open up the markets for people to be able to get in a risk managed way. That's why we started the first principal protected ETF, and we were only able to do that when there was a index on Bitcoin that was established by the Chicago Board of Options Exchange in January, because the legislation started to loosen up when the current administration became, relevant.
Yeah, and when you unveiled those ETF products, you actually came on my show to do it.
Yes.
So that was January. How's it going since then?
It's going very, very well, and we're doing a series of them. And the first one we did was 100% protected Bitcoin. And so how we do that is we use treasuries, zero coupon bonds, we buy calls, and then we sell calls, in order to pay for some of the premium. And we lock in protection with some of the upside. And the first one we did when we were on your show, I believe it was around 11% or so. So, and it changes when we issue them every quarter, which we're doing.
But you don't own the underlying Bitcoin.
We don't, and that's something that it's better because it's very liquid. It's an ETF market. People could join with $25. They don't need a ton of money to play in it, and they get the exposure of the upside in a cap rate, and they can, if they hold it for a year, they're 100% protected. Now, for different risk appetites, we've also issued 90% protected, and you get returns between 20s and 30. And then an 80% protected, which you get returns, that are 40 to 50% of the upside, which is tremendous, and they can be used in a different way in people's portfolio. and a lot more interesting to institutional investors.
So does this become interesting to institutional investors? I guess that was my next question for you: is who's looking at a product like this? Is it institutional? Is it retail? Does it create an on-ramp to more people getting more comfortable with the risk, I guess, of investing in crypto?
It is clearly an on-ramp, and that's why we did that. We wanted to expose more people into the crypto world, and to do that in a risk-managed way. I'm not going to put mom and pop and grandparents into straight crypto when they can, they have to protect their principal because they're living on a fixed income, let's say. So that's initially, crypto's really born from the retail market. Now that institutional is starting to adapt it, that's when we're going to see a huge push. And we still feel that's why we're in the beginning of the innings, because there's so much more upside why the institutions are going to get in it. And if you look at the products that we have, you can compare them to certain aspects of an institutional portfolio. For instance, let's talk about the 100% protected. It's equivalent to maybe having cash or maybe some fixed income in your portfolio, and everybody has a certain amount of cash and fixed income in their portfolio. Now, if you look at our 80% protected, it acts more like equity, where you can have up to 20% downside on equity on a given day. But the returns on average are much higher than equity. So people can start putting in the 80% in lieu of equity, because if you're getting up to 50% of coupon of the upside of Bitcoin, those are typically a lot higher than what S&P average returns are during the course of the last 20 years. So there is places where institutions can actually use some of these products in their portfolios to decrease the volatility that natural Bitcoin has. So you can buffer the downside and you can increase the allocations. A lot of experts and CIOs around the world are saying on a typical portfolio for institutions, put 1% to 2% in Bitcoin. If you use our products, you can increase that to over 5 and 10%, because the volatility of the portfolio will go down by using risk-managed products that we are offering in the markets.
I saw crypto executives and investors in Washington last week. This Bitcoin strategic reserve seems to be, it's too early maybe to say coming together, but the policy crafting is in the works, if you will. What does it do to this entire conversation?
There's clear needs for guardrails, and that builds confidence in the market. And every time you have confidence in the market, more people are going to invest. More institutions are going to invest. The conversations right now, and people like Larry Fink from BlackRock are having with these big sovereign wealth funds, it's not, are you going to invest in crypto? It's, what's your allocation? Is it 2%? Is it 5%? Is it 10%? Those are the conversations that are being had right now with the largest sovereign wealth funds in the world. It's not if, it's how much. And it's graduating from early innings to starting to, play ball now. And all the major banks, they won't even look or talk to us. And we don't even hold underlying Bitcoin. We just had the word Bitcoin in, and we target Bitcoin and the returns on Bitcoin in the name of the ETFs that we have brought. But now they're all having conversations and they're all starting to onboard our products. Big turnaround, 180 degrees from when we started in January. And we knew we were early, but we wanted to be first in the market, and we're glad we did. And we're starting to sell it, not just retail now, but institutions are coming in.
You see it as digital gold, digital real estate. How do you think about the role that Bitcoin plays in a portfolio?
Look, when you have the president saying that it should be part of your strategic reserve, it puts it up there, with gold, with oil, uranium. I mean, the asset is really, really starting to become something that everybody's looking at. Countries are using it now. There's mayors of certain great cities in this country that are getting paid in Bitcoin. So it's becoming more of the norm. And the fact that the government is getting involved, I'm typically not one who likes regulation, but you need a certain amount of regulation to build confidence and stability in the market. Even though the asset's still going to be volatile, there is going to be more stability in terms of, do you want to play? Will you play? And we're seeing that. That's going to bring so many more people into that range.
We're seeing it with stablecoins too. You had the Genius Act. I know there's some more legislation percolating as well. But how are you thinking about some of the other cryptocurrencies ex-Bitcoin?
Well, look, the stable coins, especially something like Tether, who, I think it's a great thing for the United States to be a lead in this product, because if it's dollars that are underlying that are buying it, and they have to use certain assets, and typically they'll use very, very covenant assets like U.S. Treasuries, it's a great thing for our country when you have that much volume being bought for these institutions. For instance, in Tether, I think that in 2024, they were the 6th largest buyer of U.S. Treasury. So even though we're seeing other countries lowering the amount of buying of U.S. Treasuries, our biggest buyers have always been Japan and China, and that's going down. Given these digital currencies and stable coins using treasuries, it's a great thing for the treasury market, and it's a great thing for the dollar, because if they keep using the dollar to be pegged, it will remain as the main currency.
Is this a bull case for treasuries? Do you see treasury yields coming down?
I think I don't think it's the only thing that's going to happen. It's the only reason why treasuries yields will come down, but I do think that it doesn't hurt the market at all. And we definitely need the long end of the market to come down in order to pay our debt in the near future. So anything we can do to do that is a great thing for the United States.
I mean, we've seen Ethereum as well. We're just saying the cryptos, we've seen Ethereum just rock and roll in the last couple of months. More than double in price, last I checked as well. There seems to be also this argument that you're going to start to see some of those blockchain-related cryptocurrencies become more adopted, to your point, by the big banks, by financial services, that it could change the infrastructure and the plumbing of how money is moved. How are you thinking about that at Calamos?
Look, I think you have to be forward thinking. It is changing the world. And I don't think we're going to have mutual funds in the same format that we've had in the past. Usually when we want to put a mutual fund and launch it in the United States, there's different wrappers. We want to launch it in Europe. We have to do a UCITS wrapper. We have to take the currency under consideration. And sometimes we have one strategy and we have 4 or 5 different wrappers. Using the technology that exists is something that it'll be like Bitcoin in the future, where it's agnostic to currency. Everybody buys in it. It could trade 24 hours. You don't need the banks to intermediate everything. And I think the technology is going to be used in real estate for titles. Buying and selling real estate, and getting insurance on titles and everything else, it's archaic when you really, really think about it. And it's going to be used, the blockchain, in so many different ways in the future to make things a lot easier. And I know the banks and I used to run a major center bank, is fighting it, but for the people, it's really, really something that needs to happen. Even in the last 10 years, I can remember being in Greece, where my family's from, and they had a crisis, and you could only take out 20 euros from the bank, and there was a cap. Even though you might have had a lot more money, it doesn't matter. So it's something where if you control your currency and your money, and you have access to it, and you don't have a country or a bank telling you what to do. That's why when we lived that, and it's not a third world country, and it wasn't 100 years ago, it was in this last decade, that could actually happen. I knew that this technology is going to be something that a lot of people are going to be interested in, and a lot of people are going to advocate for it. And we need, as a country, to be forward-thinking, and I'm very happy that the administration is doing that, because it's really important that we stay ahead of that and use this technology and be leaders in it, and get in front of it rather than follow it, because the ones that will follow are going to lose.
There's this brewing debate, for better or worse, right or wrong, about what these capabilities and what this adoption is going to mean for the possibility of deposit flight from banks. Have you been giving much thought to that?
Look, I mean, banks are going to have to morph into, do different things. They're not going away. And yes, they want deposits. That's why they're going to adopt it. And so they'll have it in cryptocurrency. They'll have it in there. So yeah, people can still deposit and keep money and get different returns on their money in the banks. And it'll be integrated with the banks at some point. All of them will. So it's just going to take a different flavor. I don't see the banks going away, nor do I think that people aren't going to. There's always going to be people that are conservative, and they're always going to want to invest in certain things. It's whether it be crypto, whether it be treasuries, whether but it's going to be different.
I do want to get your thoughts. We got a couple of minutes left, so I do want to get your thoughts more broadly on what we are seeing across the markets. Crypto being one piece of it.
Well, look, it's a very interesting time. We're still very much event-driven, although it's been muted. Before, every time the president was talking about a certain country and tariffs, the markets would move up and down, depending on the conversation, how well it went. Now we're seeing less volatility when the president speaks about that. The initial bomb where he talked about the tariffs and putting it, the markets obviously reacted very badly to it, probably worse than the administration thought it would. But we're back at all-time highs, and I think a lot of those conversations are going pretty well. So that was a big threat that I was worried about in the market. I think that threat is gone. I think passing of the big tax bill and making sure that those tax cuts are continuing in the future was a big issue, and I think that the markets would have reacted very terribly if that didn't get passed. That threat is out of the market. So there's still event risk with what's happening in the Ukraine and Russia and in Israel as well, and that can never really be factored in. Hopefully that is somewhat under control, but we don't know. But overall, I think the market is always extremely optimistic, and we're seeing that, right, in all-time highs in the different S&P and Dow and NASDAQ. So I think AI is a big part of that. It's going to continue to be a big part of the growth, and those people that underestimate that and think it's just maybe the next couple of years are going to regret it, because it's here to stay, and there's a lot of players. Only a few will win, but the ones that do are going to lead the market, like the ones that haven't in the past. So it's definitely, I think, I'm very optimistic going forward. We will see volatility, but the optimism of the market and the economy, because it's not one and the same. The economy is, the markets are resilient. The economy is doing pretty well. Things now that the rates are going to come down. We saw the first movement from the Fed. I think they're going to be a little bit more accommodative, whether they got dragged into it or not. I think that that's going to be positive for the economy and the markets. And if we can get the 10-year down below 4%, that's really going to help our real estate market, because the mortgage market is a big part of the economy for the United States. People don't realize 70% of all mortgages are at 5% or lower, and 20%, or actually 25% are at 3% or lower. there's no rush for people.
It's the golden handcuffs we hear
Yes, to buy new real estate and lose the cheap money that they've been lending at, right? And so right now, unless the 10-year gets down below 4%, mortgages 30 years are still at just over 6%. So once it gets down, 4% is the magic number. You get mortgages down to 6 and under. You'll see application rates for mortgages go through the moon. The economy that's another positive for the economy going forward. And so we have a lot of great things. The only thing that could really hurt it is if these two major wars get out of hand.
Okay.
Outside of that, we're very optimistic.
All right. Well, we'll leave it on an optimistic note then. John Koudounis of Calamos, it's great to be here with you on stage.
Thank you. Great to be here. Appreciate it.